If you have an aging mom or dad and somewhere in the back of your mind you're already worried about how a funeral gets paid for, this one is for you. And I want to answer the first question fast because most people are scared to even ask it. Yes, you can take out life insurance on your parents. It is completely legal, it is common, and it is one of the kindest things an adult child can quietly set up. Let me walk you through exactly how it works because there are a few rules, and one trap I really don't want you to fall into. Quick housekeeping. This is education, not financial advice, and nothing here is a promise of approval or a rate. Everything depends on health, age, and the carrier. Talk to a licensed professional about your parents' situation. Okay, let's take the fear out of this. So, can you get life insurance on your parents? Yes, but two things have to be true, and they exist to protect your family, not to stop you. The first is consent. Your mom or dad has to know about the policy and agree to it. You cannot insure someone secretly, and honestly, you wouldn't want to. It usually means one short phone call or a few health questions with them on the line. The second is called insurable interest. In plain English, that just means you would genuinely suffer a real financial loss if they passed, and you would. If you're the one who'd be paying for the funeral and the final bills, you have insurable interest. That's it. Those are the two doors, and most adult children walk right through both. Now, here's the part that makes people feel a lot better once they understand it. You are the owner of the policy. You control it, you pay for it, and you are the beneficiary, which means the money comes to you. Your parent is simply the insured person. So when the day comes, you are the one who receives the funds quickly, usually within days, and you use them to handle everything. Your mom or dad never has to manage a thing. You hold the plan. They're just protected by it. So what kind of policy actually fits an aging parent? For most families, it's a small whole life policy built for exactly this, and it's called final expense insurance. It's designed to cover a funeral and the final bills, not to replace an income. Three things make it a good fit here. It's a smaller amount, so it's affordable. The premium never goes up, and it never expires as long as it's paid, so it can't lapse on them at 85. And most of these skip the medical exam entirely and just ask health questions. But there are two flavors of this, and the difference matters more than almost anything else in this video. The first is simplified issue. Your parent answers some health questions, no exam, and if they're in reasonable shape for their age, they can often be approved with full coverage that starts right away. The second is guaranteed issue. No health questions at all, nobody is turned down. That sounds perfect, especially for a parent in poor health, and sometimes it genuinely is the right answer. But it comes with a catch, and here's the trap I promised to warn you about. Guaranteed issue policies almost always come with what's called a graded death benefit. That means there's a waiting period, usually the first 2 years. If your parent passes during that window from natural causes, the policy does not pay the full amount. Instead, it returns the premiums you paid plus a little interest. So if you rush your healthy enough parent into a guaranteed issue policy just because it was easy and something happens in month 10, your family may not get the payout you were counting on. That is the mistake I see most often. Always check whether they qualify for simplified issue first, because simplified usually pays in full from day one. Now let's talk about age and health honestly, because this is where people assume the door is closed, and it usually isn't. Life insurance for seniors over 70 is completely realistic. Even into the 80s, there are options. Common conditions like controlled high blood pressure, managed diabetes, and being a bit overweight often still qualify for simplified issue coverage. More serious health histories may point toward a graded or guaranteed issue plan instead. The honest takeaway is this: there is almost always something available. The healthier your parent is today, the better the option and the lower the cost, which is exactly why waiting works against you. So how much coverage do you actually need? Don't guess and don't overbuy. Size it to the real bill. A funeral in America often runs somewhere around $8,000 to $12,000, and then there are final costs on top, the last medical bills, maybe some lingering debt, the cost of settling things. For most families, a policy somewhere between $10,000 and $25,000 covers it comfortably. Price out what a service actually costs where your parent lives, add a cushion, and insure that number. You're covering a funeral, not building an inheritance. What does it cost? I can't give you a specific rate here because it depends, but I can tell you exactly what moves the price so you understand your quote when you see it. 3 things drive it. Age. So every year you wait, it climbs. Health, meaning simplified issue is cheaper than guaranteed issue for the same coverage. And the coverage amount itself, a $15,000 policy costs less than a $25,000. Depending on your parents' health and the carrier, final expense coverage is often more affordable than families expect, which is usually a relief once they see the real number instead of the scary one in their head. Let me save you from the 3 mistakes I watch families make. 1. Waiting. Every birthday and every new diagnosis raises the price or narrows the options. This is the rare thing where doing it today is genuinely cheaper than doing it next year. 2. Overbuying. You don't need a $100,000 policy to bury someone. Insure the actual bill. 3, and this is the big one, buying guaranteed issue when your parent would have qualified for Simplified. That mistake costs more and hands your family a 2-year waiting period they never needed. Get their health checked against real carriers first. Here's the honest heart of it. Setting this up isn't morbid, and it isn't betting against your parent. It's the opposite. It's making sure that when the hardest week of your life arrives, you get to grieve instead of scramble, and your family isn't passing a hat or starting a fundraiser. You quietly handle it ahead of time, and your mom or dad barely has to think about it. That is one of the most loving, responsible things a son or daughter can do. If you want to know what your specific parent would actually qualify for and what it should really cost, I'll help you figure it out with zero pressure. Comment the word parents or grab the full written guide and my free resources in the description. I'll look at their age and health, check it against real carriers, and give you the honest number and the honest answer, even if the answer is that you don't need much. No pitch. Just a straight answer for you and the people you love.